Profitable investing in infrastructure stocks. A 2025 outlook for high returns. Here are the lessons to be learned from this blog. Lesson 1. Infrastructure drives the Philippine economy, making it a prime investment target for 2025. Focus on stocks tied to government plans and green trends for maximum growth. Lesson 2. Diversify across subsectors like renewable energy, digital networks, and transportation to reduce risk. This strategy taps into multiple growth engines in the Philippine market. Lesson 3. Watch out for risks like political shifts, natural disasters, and debt burdens in infrastructure stocks. Pick companies with strong fundamentals to weather these storms. Lesson 4. Public-private partnerships, PPPs, offer stability. Invest in firms like Metro Pacific with solid government ties. These collaborations ensure long-term revenue potential. Lesson 5. Infrastructure investing rewards patience. Projects take time, but yield steady gains. Build a portfolio for the long haul to capitalize on the 2025 boom. The Philippine infrastructure boom, key drivers for 2025. Welcome to the dynamic world of infrastructure investing in the Philippines. As 2025 approaches, the Philippine stock market is buzzing with potential, fueled by an infrastructure boom that's reshaping the nation. Why does this matter? Infrastructure, roads, bridges, power grids, and internet connectivity is the lifeblood of any growing economy, and the Philippines is no exception. The country's young, expanding population and thriving economy are driving an urgent need for modern infrastructure. The government is stepping up, allocating over PHP 1 trillion for 2025 projects, building on the legacy of the Build initiative. Think new airports, seaports, and urban transit systems projects that boost economic growth and improve daily life. Best infrastructure stocks in the Philippines. Top subsectors to watch. Next, digital infrastructure is a must-watch. With 5G rolling out and data demand soaring, Globe Telecom and PLDT are pouring billions into next-gen networks and fiber optics, building the backbone of the Philippines' digital future. These telecom titans are key to supporting remote work and online commerce. Transportation is heating up too. Metro Pacific Investments Corporation, MPIC, is tackling Metro Manila's notorious traffic with toll roads and light rail projects like the MRT-7. Plus, the shift to electric vehicles is sparking interest in EV charging networks. Watch this space. Finally, water and waste management are critical. Manila Water and Maynilad Water Services are addressing urban water scarcity and sanitation, vital in a climate-vulnerable nation. For investors, the trick is picking companies with solid financials and government alignment. These subsectors are your ticket to high returns in 2025. Geographic hotspots for infrastructure investments in the Philippines. The Philippines isn't just one market, it's a tapestry of regions, each with unique investment potential. Where should you focus in 2025? Metro Manila leads the pack as the economic powerhouse. Mega projects like the Metro Manila Subway and the Ninoy Aquino International Airport upgrade are transforming the capital, offering big wins for infrastructure stocks tied to urban development. But don't sleep on the provinces. Cebu, the Visayas gem, is booming with the Mactan-Cebu International Airport expansion and the Cebu-Cordova Link Expressway, boosting trade and tourism. In Mindanao, Davao City is rising fast with the Davao City Coastal Road and the Mindanao Railway Project, enhancing connectivity and commerce. Then there's Clark in Pampanga, pitched as the next metropolis. The Clark International Airport expansion and Subic-Clark Railway are drawing attention, promising growth in logistics and real estate. Economic zones nationwide, backed by government incentives, are also hotspots for private sector infrastructure plays. Risks to consider when investing in Philippine infrastructure stocks. Investing in Philippine infrastructure stocks is exciting, but it's not a risk-free ride. Let's unpack the challenges you'll face in 2025. Political instability tops the list. Elections or policy shifts can derail projects overnight. Take the Kaliwa Dam. Environmental pushback and government waffling have slowed progress, leaving investors on edge. Natural disasters are a constant threat. Typhoons, earthquakes, and volcanic eruptions can wreck infrastructure, as seen with Typhoon Odette's 2021 devastation in Visayas. Companies must be resilient, but losses can still sting. Financing risks loom large. Too massive projects often mean heavy debt. If interest rates climb, highly leveraged firms could falter. Supply chain hiccups, like shortages of steel or equipment, can delay timelines and inflate costs, a headache amplified by global disruptions. So, how do you play it safe? Dig into company fundamentals. Strong balance sheets, proven management, and disaster-ready strategies are non-negotiable. Diversify across subsectors and regions to spread the risk. Long-term investment strategies for Philippine infrastructure stocks. Ready to build wealth with Philippine infrastructure stocks by 2025? Here's your long-term playbook. First, diversify. Mix it up with renewable energy. Think AC Energy, digital infrastructure, Globe Telecom, transportation, Metro Pacific, and water management, Manila Water. This balances your portfolio against sector-specific bumps. Second, zero in on public-private partnerships, PPPs. Companies like Metro Pacific, with projects like the Cavite Laguna Expressway or Ayala Corporation, thrive on government-backed contracts, locking in steady cash flows. Third, embrace ESG, environmental, social, governance factors. Firms like FirstGen, pushing renewable energy, align with global sustainability trends, attracting capital and goodwill. Fourth, consider pooled investments. While a Philippine-specific infrastructure ETF might be scarce, mutual funds with heavy infrastructure exposure can simplify diversification. Finally, play the long game. Infrastructure isn't a quick flip. Projects like railways or power plants mature slowly but deliver reliable returns over decades.